Welcome to the deep dive. Ready to get into the zone.
Always.
Today we're diving deep into Mark Douglas's Trading in the Zone.
A classic.
This book is it's like the ultimate guide to understanding the mental game of trading.
Yeah, it's not about, picking stocks or timing the market.
Right.
It's about mastering the psychology that can make or break your success.
Totally. I mean, you can have the best trading strategy in the world.
Exactly.
But if your head's not in the right place,
Yeah.
you're going to self-sabotage.
One of the biggest takeaways from the book is that our natural instincts
Okay.
actually work against us in trading.
Really? Like our gut feelings?
Well, you'd think those instincts would protect us, right?
Yeah, I mean, they're supposed to help us avoid danger.
Exactly. But in trading, our instinct to avoid pain,
Okay.
like the pain of a loss, can actually lead to bigger losses.
Interesting. So how does that work?
It's like when we're facing a potential loss, our natural reaction is to hesitate
Right.
or second guess ourselves.
Oh, yeah, I do that all the time.
We start making emotional decisions instead of sticking to our plan.
So it's like we're fighting our own wiring.
Precisely, and Douglas really dives deep into those 4 primary trading fears.
Yeah, lay mommy.
Buying wrong, losing money,
Yep, been there.
missing out FOMO,
Oh, the FOMO is real.
and leaving money on the table.
Yeah, all those fears can really mess with your head.
Absolutely, they distort how we see market information and lead to classic trading errors.
So how do we overcome those fears? I mean, trading does involve risk, right?
It does, but it's not about eliminating risk. It's about accepting it.
Okay, but accepting losses. That's easier said than done.
True, but it's a crucial mindset shift.
So how do you actually get comfortable with the idea of losing money?
Douglas uses a really helpful analogy. Think of it like a casino.
A casino.
Yeah. They know they're going to lose some hands, some spins of the roulette wheel,
Right.
but they're not freaking out about it.
Because the odds are in their favor over the long run.
Exactly. They have a system and they trust that system.
So we need to detach ourselves from the emotional roller coaster of each trade.
Yes, and focus on the bigger picture.
The long game.
Just like the casino, we need to think about consistently exploiting our edge.
Okay, that's starting to make sense. So are you saying we should treat trading like a game of chance?
Not exactly. It's more about shifting our perspective.
Right.
We're not trying to win every hand or predict every market move.
We're focused on making good decisions over time.
Based on our strategy and our risk management.
This is starting to click. It's like we need to reprogram our brains to think like a casino owner.
Exactly. Douglas outlines 5 fundamental truths of trading.
5 truths. All right.
Right.
I'm all ears.
First, anything can happen. The market is unpredictable.
Okay, that's definitely true.
Second, you don't need to know what's going to happen next to make money.
Really.
You just need an edge.
An edge.
Yeah, a strategy that gives you a higher probability of winning over time.
I'm starting to see how these truths can help us reframe our thinking.
It's about letting go of the need to be right all the time.
Okay, what are the other 3 truths?
Third, wins and losses are randomly distributed.
Meaning...
Even with a good strategy, you're going to have losing streaks.
So it's not about being right all the time. It's about having the odds in your favor over time.
You got it. The 4th truth, an edge, just means the odds are slightly in your favor.
Like flipping a slightly weighted coin.
Exactly. And finally, the 5th truth,
Hit me.
every moment in the market is unique.
Whoa. Every moment unique. Doesn't that make it even harder to predict what will happen next?
It does, and that's why clinging to the need to be right on every trade
Right.
is a recipe for disaster. This is where the idea of thinking in probabilities comes in.
Probabilities.
Yeah.
I've heard that's how professional traders think.
They're not trying to predict every little move.
They're focused on the odds.
Just like with that coin flip, they accept that sometimes it lands on tails.
Sometimes on heads.
It's the long-term probability that matters.
It's really just starting to click for me. It's
Yeah.
about detaching from the emotional ups and downs
Yes.
of each trade.
And focusing on the bigger picture, the long-term probabilities.
Okay, this is all making sense, but how do we actually put this into practice?
Well, that's where the mechanical stage of trading comes in.
A mechanical stage. Okay, tell me more.
This is where you build the foundation for consistent success.
So, like a set of rules to follow.
It's more about developing that rock-solid mindset
Okay.
and a set of tools that will help you execute your trading plan flawlessly.
Without letting your emotions get in the way.
Exactly.
This is a lot to unpack, but it's incredibly insightful. I'm already starting to see trading in a whole new light.
We're just getting started.
So in part 1, we were talking about thinking like a casino owner.
Right, detaching from the outcome of each individual trade.
Okay, so how do we actually put that into practice? Like, how do you actually detach yourself from the emotional roller coaster of winning and losing.
Yeah, that's the million-dollar question, right? I mean, one of the most helpful things Douglas suggests is to think about actually like running a casino.
Running a casino.
Yeah, like imagine you're the owner.
Okay.
You've got all these games set up. The odds are slightly in your favor.
Right.
You're going to lose some hands, some, spins of the roulette wheel.
Yeah.
But you also know that in the long run,
You're going to come out ahead.
yeah, you're going to make money because the math is on your side.
Okay, so we need to think of ourselves as the casino owner, not the gambler.
Yeah, exactly. The casino owner is not emotionally attached to the outcome of any individual hand or spin of the roulette wheel.
Right.
They're focused on the big picture, the long game.
Got it. So we need to detach ourselves from the emotional ups and downs of each trade and focus on the long term.
Precisely. The casino analogy really helps us shift our perspective.
Okay, I like that analogy. It's making more sense now. But it's still tough, right? Like when it's your own money on the line, it's hard not to get emotional.
Oh, absolutely. It's definitely a challenge, but that's where discipline comes in.
Discipline.
Yeah. Douglas talks a lot about the importance of having a clear trading plan and sticking to it no matter what. And that includes predefining your risk on every single trade.
Predefining the risk. So knowing exactly how much I'm willing to lose before you even enter the trade.
Exactly. That's crucial for removing emotion from the equation. By deciding in advance how much you're willing to risk, you take away the fear of the unknown.
It's like setting a mental stop loss before you even place the trade.
Yes, exactly.
So you're not reacting emotionally, you're acting based on a predetermined plan.
You got it. It's about taking control, being proactive instead of reactive.
Okay, that makes sense. So define the risk, stick to the plan.
Got it. But I have another question.
Yeah.
About those fundamental truths we talked about earlier. Specifically, the idea that every moment in the market is unique. If that's true, how can we ever rely on past patterns or historical data to inform our trading decisions?
That's a great question. And it gets to the heart of the challenge of trading.
Right.
Yes, every moment in the market is unique, influenced by an endless stream of factors. But that doesn't mean we throw out all logic and analysis. So we can still use technical analysis, chart patterns, indicators, all that stuff.
Absolutely. Those tools can give us an edge. They can help us identify potential opportunities.
Okay.
But we have to remember, they don't guarantee future outcomes.
Right. The market is dynamic. It's constantly evolving.
Exactly. So we can't just blindly follow a system or strategy without considering the current context, the bigger picture.
Got it. So we need to be adaptable.
Yeah.
Adjust our approach as needed.
Exactly. That's where experience and intuition come into play.
Intuition. You mean like a gut feeling? Isn't that a bit risky in a field that's supposed to be all about logic and analysis?
It can be if intuition isn't developed alongside a solid foundation of knowledge and experience.
Okay.
But Douglas argues that intuition isn't some magical power, but rather it's a culmination of years of observation, analysis, and pattern recognition.
So it's like your subconscious mind processing all that information and sending you signals.
Exactly. It's that feeling you get when you've been trading for a while and you just sense something's about to happen.
Okay. So it's about learning to trust those signals. But how do we know when our intuition is reliable and when it's just noise?
That's the challenge, right? And it takes time and practice to develop that discernment. But it starts with paying attention to those subtle feelings, those hunches. Notice when they arise, and even if you don't act on them, immediately make a note of them. See how they play out. Over time, you'll start to recognize patterns and develop a sense of when your intuition is on point.
This is fascinating stuff. We've covered a lot of ground already. Before we move on, can you just remind us of those 5 fundamental truths of trading? I just want to make sure I've got them locked in.
Of course. Let's recap. First, anything can happen in the market. Second, you don't need to know what's going to happen next to make money. You just need an edge. Third, wins and losses are randomly distributed. Fourth, an edge is just a higher probability of success. And fifth, every moment in the market is unique.
Got it. And by accepting these truths, we can start to shift our perspective and approach trading with more objectivity and less fear.
Exactly. And that shift in perspective is essential for moving into those later stages of trader development, the subjective and intuitive stages.
Okay, that's where things get really interesting.
Oh, yeah, that's where the magic happens.
I can't wait to dive into those stages. But first, we need to master this mechanical stage. What are some practical techniques we can use to build that solid foundation of self-trust and discipline?
That's what we'll explore in the next part of our deep dive.
Welcome back to the deep dive.
Mm-hmm.
We've been talking about thinking in probabilities, mastering our emotions, all that good stuff.
Foundation.
Yeah, the foundation. But now I'm really curious about these later stages of trader development that Douglas talks about, the subjective stage and the intuitive stage.
Yeah, those are where things get really interesting. It's like you've got the basics down,
Right.
you're managing your risk, you're thinking clearly, but now you start to develop your own unique style.
So it's like becoming more of an artist than a technician.
I like that analogy. Yeah, you're
Yeah.
not just following a set of rules anymore. You're starting to see the market in a more nuanced way.
Okay, so what exactly happens in the subjective stage? Like, how does it feel to be a subjective trader?
We're still grounded in the fundamentals, right? You have a trading plan, you manage your risk, you think in probabilities,
Okay.
but you're also starting to trust your own judgment more.
So you're adapting to the market as it changes.
Exactly. You're recognizing patterns and shifts that might not be obvious to someone who's just following a rigid set of rules.
You're seeing things that other traders might miss.
And you're developing a deeper understanding of your own strengths and weaknesses as a trader.
This is making me think about all those times I had a hunch about a trade,
Yeah,
but then talked myself out of it because I couldn't, logically justify it.
that happens to all of us. It's like our rational minds are trying to override our intuition.
Which brings us to the intuitive stage.
Right. This is where things get really interesting. Douglas argues that intuition is crucial for reaching our full potential as traders.
Okay, but how do we develop intuition? It seems so mysterious.
It's not about some magical power.
Right.
It's about experience, observation, and pattern recognition.
So it's like our subconscious mind is picking up on things that our conscious mind isn't even aware of.
Yeah, it's like you've seen so many charts and so many market moves
Yeah.
that you just start to get a feel for what's going to happen next.
But isn't that dangerous?
Yeah.
To rely on feelings.
Well, any kind of trading is dangerous,
That's
right?
not true.
The key is to develop your intuition alongside a solid foundation of knowledge and experience.
So you're not just blindly following your gut,
Exactly. You're using your intuition to inform your decisions.
but you're also using logic and analysis,
It's about finding that balance, that sweet spot.
where logic and intuition work together.
And the more you trade, the more refined your intuition becomes.
So that's like a muscle you have to exercise.
Exactly. The more you use it, the stronger it gets.
This has been such an eye-opening deep dive into trading in the zone.
Yeah, it's a classic for a reason.
It's not just about trading strategies. It's about mastering your mind.
And understanding the psychology of the market.
I feel like I have a whole new framework for approaching trading now.
I hope so. Remember, it's a journey, not a destination.
Yeah, you're constantly learning and growing.
And developing your intuition.
This is all great stuff. Thanks for sharing your insights.
My pleasure.
And thanks to everyone for listening to The Deep Dive. We'll be back soon with more explorations into the world of knowledge. Until then, keep learning, keep growing, and trade wisely.